Hello. Regarding UK house prices, the news for September is that the overall market is showing signs of cooling, with slower growth compared to earlier this year. However, there is a north-south split, and prices in the north continue to rise at around 5% per year, and this trend is expected to continue. But overall, rising uncertainty around the autumn budget and possible tax changes is making buyers and sellers more cautious. We'll discuss this later. Now, as always, you'll see different figures in the news depending on which body is reporting them. Each one measures prices slightly differently, but taken together, they show that on average in the 12 months to September, house prices have risen by around 2% for the UK as a whole, with growth in the north of England being more than double at around 5%. The most reliable data comes from government bodies such as the UK Land Registry, HMRC, and the Office of National Statistics. This is based on actual transactions, but it lags behind as reports come about 2 months later and are based on deals agreed even earlier. According to the Land Registry, the annual price rise to the end of July was 2.8%, bringing the average UK property price to around £270,000. The mortgage providers Halifax and Nationwide published their own house price indexes based on mortgage approvals. Their data is more up to date than the Land Registry, but excludes cash purchases. Nationwide reported annual growth of 2.2% to the end of September, with house prices up 0.5% in the month of September. Their average UK property price now stands at around £273,000. Halifax, on the other hand, reported a much weaker annual growth of just 1.3%. Their average house price is higher at around £298,000. And the property portals such as Rightmove and Zoopla report on asking prices of homes listed for sale. Their figures reflect market sentiment right now, although the final sold prices may be lower. Rightmove reported that the average asking price in September rose slightly by 0.4% month on month to 370,257. Zoopla's most recent index indicates annual growth of around 1.4%, with forecasts for the year of around 2.5% overall. So you can see why the headlines can look so different. It all depends on which set of figures you're looking at. Now, let's put this in context with inflation. According to government figures, CPI inflation in the 12 months to September was 3.9%. This means that in real terms, house prices have actually fallen slightly because growth of 2% is below inflation. That allows some commentators to say property values are effectively declining when adjusted for the cost of living. Now, looking forward, the media is once again divided. Some point to a possible slowdown or even small price drops in London and the South. Others focus on the stronger growth in the North and Midlands, where affordability is better and demand is rising. Now, as investors, it's important not to get too distracted by short-term noise. Most buyers today are looking at property as a long-term investment, not something to flip quickly for profit. Over the long run, UK property prices have doubled on average every 12 years, and many feel this trend will continue for low-cost houses in the north. Even after downturns or recessions, the market has always recovered strongly. The fundamental driver is still the same: supply and demand. Demand is increasing with population growth, smaller households, and people living longer. Supply, on the other hand, continues to lag behind. Now, the government's building target of 1.5 million new homes in 5 years is simply not enough, and most experts don't think these targets will be met. Please comment below and let us know what you think about UK house prices right now. Do you believe lower cost homes in the north will continue to grow faster than more expensive homes in London and the south? Please watch the message from our sponsor at the end. Thanks for watching.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.